The Employee Retention Credit from the IRS is the last major COVID relief program. Claim up to $26,000 for each employee you had on payroll. This is Marty Stewart with Disaster Loan Advisors. The IRS tax refund is newfound money for your business. Let us help you navigate the ERC program with flexible options and working together. You can relax and have peace of mind that you're in good hands. Stay safe, stay compliant, and keep more of your refund. Take the next step and schedule a free ERC consultation call with us today.
Everything you need to know about the Employee Retention Credit taxable income. The Employer Tax Credit, ERC, is not considered taxable income, but under IRC Section 280C, it results in a decrease in pay equal to the amount of the credit. Therefore, the Employee Retention Credit affects your income tax return. However, there are many benefits associated with receiving the credit that outweigh the tax implications. You should know many things about Employee Retention Credit taxable income, which you can consider and get various benefits when filing taxes. Employee Retention Credit taxable income. When the ERC return is issued, it is not taxable, but the rules for cost refusal apply to earnings that are equivalent to the amount of the ERC. A taxpayer's wage deduction must be reduced by the amount of the ERC relevant to their tax year. As a result, a taxpayer is prevented from double dipping and claiming a deduction and a credit for the same wage expenditure. It is important to note that taxpayers may still deduct their appropriate Social Security and Medicare tax contributions. Employee Retention Credit taxable income in 2021. According to IRC Section 280C, ERC cannot be considered taxable income. Therefore, there is a decrease in the payments that is just about the same as a credit amount. This decrease happens in the year that the wages were paid. Therefore, even if the refund hasn't arrived yet, a 2021 credit must be included on the 2021 tax return. A taxpayer must have already spent or acquired the wages necessary to qualify for any applicable ERC at the end of the tax year and, presumably, the required knowledge to calculate the ERC's amount reasonably accurately. The wage expense disallowed must be applied in the year to which the ERC claim pertains, not when the ERC claim is submitted or when the funds are received. A taxpayer may file an updated payroll tax return in a future tax year. In these situations, the taxpayer must modify their prior year's income tax return to reflect the disallowed wage deduction during partial shutdowns. What is considered income for the Employee Retention Credit? Eligible wages can be considered as income for ERC. All salaries and health insurance benefits are given to an employee when the employer is regarded as a qualified business and are covered by the ERTC for small employers. Earnings and health insurance benefits provided to an employee unable to perform work-related duties due to the pandemic are deemed fair wages under the ERTC for an eligible company that is not considered a small company. Only when the company is regarded as an eligible employer may eligible wages be incurred. Therefore, in general, the company no longer has qualified earnings for the credit if they no longer fulfill the eligibility requirements having special rules. Is the ERC refund taxable income? The ERC is not taxable but subject to expense disallowance laws, which convert it into gross income. So if an employer got $200,000 in ERC during a period, it would be required to deduct $200,000 from its qualifying health plan expenditures and deductible salary expenses, exposing it to tax on an additional $200,000 income. The eligible health plan expenditures paid for or incurred in 2020 and reimbursed by the ERC are subject to the expense reduction guidelines. In addition, no percentage of the ERC is subtracted from the employer's deduction for its payment of Social Security and Medicare taxes. The spending disallowance rules may also compel taxpayers to lower depreciation or basis for any capitalized wages or wages included in inventory using the complete absorption costing method. Even though the IRS does not state this in the notice or its published list of FAQs 1.280 C1 and 1.280 C3 of the Treasury Regulations sections. Employee Retention Tax Credit Updates. The IRS has addressed many unresolved concerns about Employee Retention Credit, including how to use tips when determining qualifying earnings and whether COVID-19 relief funds should be included in gross receipts. Since the ERC was first passed in 2020, taxpayers have questioned what effect further COVID-19 relief may have on a company's gross revenue. Employers might become eligible for the ERC in several ways. According to one technique, an employer's substantial drop in gross earnings between the quarter for which qualifying is sought and the same quarter in 2019 must have occurred. To establish ERC eligibility, the IRS launched a unique safe harbor rule in Revenue Procedure 2021-33 that permits taxpayers to deduct funds received through the COVID-19 relief programs mentioned above from the computation of gross receipts. Instead, according to the safe harbor, the sums are considered gross revenues for all other tax reasons. The guideline suggests that subsidies or loan forgiveness from any other program will remain to qualify as gross income for the ERC, as it only refers to the 3 COVID-19 relief programs mentioned above. Taxpayers weren't sure whether government provided COVID-19 relief amounts, such as loan forgiveness under the Payroll Protection Program, PPP, grants to operators of shuttered venues, and grants for restaurant revitalization, should be included in gross receipts when determining a significant decline until the IRS issued this guidance. How does the Employee Retention Credit affect tax return? Taxpayers may need to reflect an ERC on a return and raise taxable income before they get paid due to IRS processing delays for updated returns. Therefore, it may be helpful for firms to assess ERC eligibility fast. In addition, an increase in 2021 enables eligible firms to deduct up to 70% of up to $10,000 in salaries for each employee every quarter. This raises the annual credit cap for each employee to a maximum of $28,000 in total. It is necessary to file an updated business income tax return or an administrative adjustment request, AAR, for partnerships if the ERC was received in 2021 for 2020 quarters and the 2020 income tax return has already been submitted. The credit will not appear on the 2021 tax return. How is the Employee Retention Credit reported on tax return? Taxpayers that use the accrual method typically report income and deductions in the following ways. The circumstances that set the right to income or establish the taxpayer's payment obligation have all taken place, and the amount can be estimated with acceptable precision. There is even another restriction in the case of a deduction. The all events criteria are not deemed satisfied until the economic performance, often when services are rendered or when the property is utilized or given. Cost disallowance, which is neither a deduction nor an item of income, is not cleanly covered by these rules. Following the CAAS approval, taxpayers who received a PPP loan in 2020 and qualified for the 2020 ERC complied with all ERC 2020 conditions. Rules of IRC Section 280C. According to IRC Section 280C rules, no deduction shall be permitted for that part of wages or salaries paid or incurred for the taxable year equivalent to the total of the credits computed for the taxable year. Both financial statement and accrual basis taxpayers must comply with the regulations of IRC Section 280C in this situation. It could make sense for taxpayers to delay submitting their 2021 income tax return until any future claims for the 2021 ERC can be filed to lessen the workload for 2021 income tax filings. A taxpayer can have to pay the taxes payable due to the expenditure disallowance before they get money from the ERC refund, given the current IRS processing period for updated payroll tax forms. What are qualified wages for the Employee Retention Credit? Qualified wages are often those given to employees who are not delivering services because operations have been discontinued or owing to a drop in gross revenues, up to $10,000 per employee if a firm maintains more than 100 full-time staff in 2021. ERC credits are computed using the qualifying salaries given to workers when the employer was in an eligible employer status. The refundable tax credits for most businesses using this program far outweigh the payroll taxes generated by the employers. As a result, ERC advantages can exceed the sums a company earns in PPP finance. Conclusion and summary related to the Employee Retention Credit taxable income. For many firms, the Employee Retention Credit has been a significant tax incentive in 2020 and 2021. Despite being a rather challenging credit, the ERC may be advantageous for many businesses with income tax purposes. ERC taxable income is a complex system, but it's important to understand the basics to make the most of the tax benefits available. Consult with a tax advisor to get specific advice for your business.
As you can see, navigating the Employee Retention Credit program is very complex and confusing to try to figure it out on your own. Even on the IRS ERC FAQ pages, it says this page is not current. There have been several years of updates and changes to this IRS tax credit already, including 4 congressional acts and 5 updated guidances from the IRS, totaling over 3,900 pages. Who has time to sift through all that information, let alone decipher some of the confusing language and rulings? In order to stay compliant with current IRS ERC rules and regulations, expert specialized help is highly recommended. Even if your business received an SBA PPP loan, you are still eligible for the ERC credit. If you think you may not qualify, it's worth a conversation to see if your business does. Let us assist you with a complete employee retention credit process, or if you might be stuck on filling out the IRS 941X forms correctly on your own. We are here to help. Stay safe, stay compliant, keep more of your refund. Email us at support@disasterloanadvisors.com or call us toll-free at 877-463-9777 extension 3. Or visit us on the web at www.disasterloanadvisors.com/ERC for complete details on the Employee Retention Credit Program for your business.